Hello everyone, welcome to BISP Solutions. I am Tanvi Arora, working here as a functional consultant. So in today's video, we are going to see the case scenario of holding company's investment in 3 of the subsidiaries with 100% ownership. So we will go to our smart view. So this is my Excel sheet. I'm going to connect it with the smart view. I'll click on smart view, then on panel. And this is the URL is already here. So I'm just going to click on ad hoc analysis and console. Okay, so this is my POV. And before defining the POVs, I will go to FCCS ad hoc and change the alias to default. Okay, now. So I'll start defining it. I'll define my scenario as plan, refresh it. View as periodic. Currency as entity currency. Movement, I will take it to the top and then I will define it. Data source as data input. Consolidation as entity input. Intercompany, I will take it to the top again. Multi-gap as local gap and product as no product. I'm going to refresh my POV. Okay, now I will take this movement to the upwards. Also the intercompany to the top. Fine. Then I'm going to change the view. Basically, I'm going to put the movement here in the side and entity to the top. So I'll click on FCCS ad hoc and then pivot. And intercompany, entity, I will take it to the top. Refresh it. Okay. So I'm going to define my intercompany as no intercompany. And entity, I'm going to take as first I will take my first entity as North 101. It is the parent company. And then I will create 3 more entities. That is the subsidiary companies. That is North 102, 103, and 104. So first of all, I'm going to define my parent company. So it's North score 101. I will define my years. This financial year 15. Period is January. Okay. Then after defining all this, I'm going to refresh it again. Okay. Now I'm going to copy this to 3 of the other columns for the subsidiaries. Refresh it again. I will change the name as North 102. This is North 103. Or I'll keep it as N underscore 102. N underscore 103. This is N underscore 104. Okay, rest all things will be same. And now I will refresh it. So this is my parent company, and it has made 100% investment in these three subsidiaries. So the next step is I will define my accounts and then the movement. So I have already created my accounts. I'm just going to copy that. These are my accounts of the balance sheet and the P&L. Okay, then I'm going to define the movement. These are my movements. Okay, so as you can see, account movement is closing balance. It is the top level member. And then balance sheet traditional approach, total movement changes. Also for the total assets, total movement changes. Then for debtors and bank city 2, it is changes in accounts receivable for debtors, change in cash for the bank. Then for total equity, it is total movement changes again. Common stock is changes due to issue of stock. Total liabilities is total movement changes. Creditors is changes in accounts payable. And for rest of the P&L accounts, it is change in net income. Okay. Then here I'm going to define my investment. Okay, now I'm going to refresh my sheet. So I will submit my data to make figures as 0, and then I will input my own figures. Yes, so also I will define my intercompany plug account here for 3 of the subsidiaries. So what I'm going to do is I'm just going to copy this. So this will be not 101 only, as it is parent company. Intercompany, I will define as the intercompany partner, sorry, intercompany plug account. So it is the North 101 has first invested in North 102. The second investment is in North 103. And the third investment is in North 104. So I have defined my investment. Now I'm just going to refresh this. Okay, now I'm going to input my figures in this. Okay, so here I will take my debtors as 1,75,000, bank city as 1,65,000, common stock is my share capital. So it I will take it as 3 lakhs. Then creditors as 20,000, income one as 50,000, direct wages as 18,000, accounting overhead as 12,000. Okay, then I will define it for North 102. I'm going to take debtors as 90,000, 1,85,000, common stock as 1,50,000. Then creditors as 1,20,000. Income as 35,000. Direct wages as 35,000. No, sorry, 17,000. Accounting overhead as 13,000. So for first of all, for these two, I will submit data and see whether it is rolling up to the parent member. Submit it. So as you can see that our balance sheet is tallied. The total assets is equal to liabilities plus equity. So the total balance sheet difference is 0. Now I will input figures for these two subsidiaries. So here I'm going to take debtors as 1,50,000. Bank City as 1 lakh. Then 1,55,000 common stock. Creditors as 50,000. 80,000 income. Direct wages as 25,000. Accounting overhead as 13,000. Again, I'm going to submit the data. There's some difference. We'll see that. Okay, so accounting overhead, I will take it as 10,000. And then I will submit the data again. So the members have been rolled up to their parent members. Okay, and the difference is 0. I will input figures in the 104, not 104 subsidiary. Two lakh debtors, 1,35,000 bank, common stock as 2,50,000, creditors as 80,000, income as 60,000, direct wages as 20,000, accounting overheads as 35,000. Okay, I'm going to submit this data. Difference is 0. Then I'm going to provide for my investment. So in my first company, the investment is 1 lakh. In the second one, it is 3 lakhs. Okay, and in the third one, it is 4 lakhs. So basically, when the consolidation will take place, this investment will get eliminated. So I'm going to save my file also. And as you can see that now I will just submit my data first. Now I will go to my application and define my ownership structure and run the rule of consolidation, business rule of consolidation. Okay. This is my application. So I will go to application and then I will go to consolidation. Then here I'll first see whether my POV is correctly defined or not. Scenario is plan, financial year FY 2015, period is January. Okay. So I will select my entity. It is North 101, 2, 3, 4. So this is my holding company. I'll just refresh it. This is 100 because the ownership percentage is 100. And in these three subsidiaries also, the ownership percentage is 100. The investment is 100%. So I'll just quickly select all these again so that it doesn't give me errors later on a later stage. And these are defined 100, 100, 100. Okay. So what I'm going to do is I'm going to save these changes. And then I'm going to recompute my ownership data. So scenario is plan, year is 2015 and January. I'm going to recompute this. It is done. I can see that. Now the next step is to go to data. So from here, I will go to data. And then to data status. So my POVs are correctly defined. So I will find my entity, search for my entity. It is North 101. You can see that it is impacted. Okay. So the next step is to run the business rule. So from actions, I'm going to run the business rule, consolidate. Entity is defined correctly. Okay. In this N100 underscore 100, all these entities are there. This is the parent member. Then enter period, it is January, plan scenario and financial year 15. So I'm going to launch this. Then I'm going to check the status again. So we can see that the status has changed to OK. So that means our consolidation has been done. And now we will go to our Excel sheet again. So this is our Excel sheet. This is the input sheet. I'm going to rename it. And I have to make one output sheet to see the results. I will again connect it with the smart view. Okay. So what I'm going to do is, first of all, I'll go to change alias default. Okay. So I will define my POVs here. Scenario is plan. View is periodic. Currency, I will take it as parent currency because I'm going to define my top level members. Movement, I will take it to the upwards. And then data source as total data source. Consolidation as entity total. Intercompany as intercompany top. I'll first refresh it. Multi-gap as local gap and product as no product. Refresh this again. Now I'm going to take these members to the top. So I will take entity to the top and movement to the side. Here I'm going to define my entity. Year as financial year 15 and period as Jan. Refresh it again. Okay, now I'm going to copy my account members. Okay, then I will define the movement. And then I will refresh it again. I can see that the figures are here. Now I want to see the effect of consolidation. You can see that my goodwill is 2,45,000, but how it is coming here and how are the retained earnings coming here, we'll see the calculation separately. Okay, so now what I'm going to do is I'm going to copy this. Okay, now I'm just going to change my entities. It is 101. Refresh this again. So now the consolidation has taken place. I can see that if I total my current assets, of total is 12 lakhs, which is coming to 12 lakhs. And I can just total my debtors as well. So individually also I can see that it is 6,18,000 and it is 5,85,000. So my holding company's total assets and the subsidiaries total assets have been added up and the result is showing here. Okay. Also, we will see the goodwill is not here. It is showing in the parent entity. Okay. So we will see how this is coming. Now, if I see my total liabilities, it is coming to 10,70,000 and individually also it will tally 2,70,000. Also by default, it is if I total this, it is coming to 75,000 because the investment is 100% here. That's why. Okay. So the investment is 100% here. And if I see that like this figure where it is coming from, I will calculate it separately. Also, I can total up my income. Just 2,25,000, 80,000 and 70,000. And as you can see that our investment was 1 lakh plus 3 lakh plus 4 lakhs. It was 8 lakhs, which is showing here. Okay. Now I will just see how to calculate this goodwill. I'll make a separate column for this. So how goodwill is calculated? I will define my total investment. It is 8 lakhs because the holding has total investment of 8 lakhs in the subsidiaries. And then I will deduct my net assets from there. So how much the holding company has paid in extra. So the difference will be the goodwill. So I will link this with here. And net assets will be the common stock of the subsidiaries. So 1,50,000, 1,55,000 and 2,55,000. So it is coming to 5,55,000. Okay. So the difference is goodwill. So this is coming to 2,45,000, which we can tally it from here. It has automatically calculated for us. This is our goodwill figure. Then we will calculate the retained earnings. The minority interest will not be calculated because this is 100% investment. So there are no minority interests. There is no minority interest. So retained earning, total retained earnings of the parent, I will take 20,000. Then retained earning of my subsidiary 1. Just 5,000. For subsidiary 2, just 45,000. And for subsidiary 3, just coming to 5,000. So I'll just add these up. So it is coming to 75,000, which I can tally it from here. And now, if I want to see the effect of the elimination, what I'm going to do is I'm just going to insert one column here. And copy this here. So the difference will be, if I want to see the eliminations, I will define my total data source as total eliminations and then refresh it. Okay. So as I can see that the total of this 2,45,000 and this intercompany top is 2,45,000, which is coming to 2,45,000. And if I total these two, see, it is coming to 3,75,000, 3 lakhs, and this 8 lakhs has been eliminated. So this is the effect of the elimination when the consolidation is done. So that's it. Thank you so much.